Hello, everyone, and welcome to Schwab Coaching. My name is Cameron May. I'm a Senior Manager of Trading Derivatives Education here at Schwab. As you've just heard, closing bell has just sounded, and that means it's time for our webcast series called After the Close. We have a lot in store today. The S&P 500 just touched all-time highs, and today I wanted to talk about those traders who take their trading cues from a major index like the S&P 500 and plan and place their trades after the market has closed. Today we're going to be talking about planning and placing a bull flag trade, maybe before we sit down for dinner. So it should be a good discussion. We'll talk about entries and exits, planning for whether the trade goes well or poorly. Some of you are not going to be familiar with bull flags, so we'll make sure that we include a definition as well. A lot to cover, but before we go to any of that, let me first of all say hello to everybody that's already chatting in. Great to see Scott and Life in the Fast Lane, David, Constant, everybody else. Constant, thanks for joining us week after week. We always do appreciate your attendance and your contributions to these discussions. If you're here for the very first time, I want to welcome you as well. And if you're watching on the YouTube archive after the fact, well, enjoy the presentation, but be aware that you're invited to join us in the live discussion. This one kicks off promptly, closing bell, 4 o'clock Eastern time. This is a Thursday webcast series. Now, I'm just standing in. I'm filling in while the regular presenter is out. They'll be back again next week, but definitely appreciate the opportunity. I'm also joined in the chats by my very good friend, James Boyd. James and I have been working together for more than 20 years. James been at this for even longer than I have as a coach. So, James, thanks for having my back. And James and I would like to issue an invitation to everybody listening. If you have an account on X, you should be following your favorite presenters there. It's the best place to connect with your favorite presenters. You can find me there at Cameron May CS. You can find James there at James Boyd CS. But let's get into this discussion of planning tomorrow's bull flag trade tonight before sitting down for dinner. So as we do, of course, we need to consider the risks associated with trading and investing. Risks certainly apply, even, yes, when using charts. This is important information, so bear it in mind. The information here is for general informational purposes only and should not be considered an individualized recommendation or endorsement of any particular security, chart pattern, or investment strategy. While this webcast discusses technical analysis, other approaches, including fundamental analysis, may assert very different views. Schwab does not recommend the use of technical analysis as a sole means of investment research. And investing involves risks, including the loss of principal. All right, so let's set the agenda for the day. First thing I want to do is get that context regarding what just happened on the S&P 500. The S&P touched all-time highs, but as some chartists may have noticed over the course of the last 2.5 weeks, it seems like it may have established a near-term bull flag formation. So I want to talk about what that might mean for a trader as they're looking back over what's been happening today after market close and also over the last couple of weeks, and then looking for bull flags and using those to plan and place trades. So we'll look at the markets, we'll talk about what a bull flag is, and then we'll use it to plan and place an example trade today. So all of this is going to be done using the Thinkorswim desktop trading software platform. I'm going to go there right now, but I want to let you know if it's your first time watching this webcast series, if it's your first time seeing one of our webcasts here at Schwab Education, you'll commonly see us using the Thinkorswim desktop platform. It's software that can be downloaded free of charge from within your Schwab Online account. So you just log in to your Schwab Online account, go to the Trade tab up at the top, and you'll see in the drop-down menu, just look for the keyword Thinkorswim. I'll just tell you to look for that. You click on that, follow some on-screen prompts. It'll have you set up in no time. Now, as you log in, it's going to prompt you for a username and password. Just use your Schwab username and password. And also note that it'll ask you whether you want to access the paper money trading for Thinkorswim, which is a largely identical mock-up of the real platform. Just allows you to acquaint yourselves with the with tools and maybe even strategies using a practice platform, or you can log into your live accounts and use the software for the management of those. But in any case, here we find ourselves on the S&P 500 desktop platform, and I've just gone to charts and typed in the symbol for the S&P 500, SPX. Here's what's been going on since those April lows. It's really been quite the recovery. We've been running up and pulling back and running up and pulling back and running up and pulling back. But ultimately, in record time, this is the fastest bear market recovery in history. We pushed through those previous highs and touched all-time highs. Now we've sagged back from that just a little bit at today's close. But what I wanted to talk about today was this, what some technical traders might consider kind of an interesting pattern in the way the S&P has behaved over the last 2.5 weeks. And so let me know, as I draw this out on the chart, are you familiar with a bull flag pattern? In the discipline known as price pattern trading, this is probably the most common pattern that a trader will encounter. So as I draw that in, chat in, let me know, are you familiar? Wiley, thank you. Yeah, appreciate the happy birthday wishes. Got that coming up tomorrow, getting older by the day, literally. Anyway, yeah, you'll see this behavior in price where we ran up sharply on the S&P 500, pulled back a little bit, and then we appear to be advancing again. So this is known as a bull flag. You can kind of see why. You can see why physically it might be described as a bull flag. It has what appears to be a flagpole, and then sort of the cloth portion of the pattern. I definitely want to go deeper into the psychological underpinnings of a bull flag and explain how it might help a trader establish entry, profit, and loss rules. Nikhil says not familiar. David, you say you've seen it? Okay, but yeah, well, let's make sure that everybody's familiar with it. I noticed this. I've seen this developing over the last couple of weeks. Keep my eye on it. Doesn't mean that it's a guarantee that the S&P is going to continue higher. It's typically interpreted as a bullish behavior, though. But I did pose a question out to my followers on X. And that was, I posted this yesterday. I wanted to get their input. Hey, technical traders, that means chart users. In your view, does this appear to be a legit bull flag on the S&P 500? Yes or no? If so, why? Or if not, why not? And I've gotten a good number of responses there. But there's that flag. And so far today, it seems to be continuing. That's interesting. Not a guarantee that it will continue. But let's say that our hypothetical trader who's sitting there after market has closed, things have settled down, they can take a breather and maybe make their trade plan not quite so hurriedly. Let's say that they have noticed this same thing on the S&P 500, and they know that as the S&P goes, so typically go so many stocks out there. If the S&P is exhibiting this apparently bullish pattern on its chart, let's say that our trader suspects that there are maybe lots of other charts, maybe component companies of the S&P 500 exhibiting similar behaviors. Ooh, Max, you know what? You got ahead of me by about 5 seconds. I was actually going to propose a question that some might be asking. Here's the question that Max just said, just asked. Is the market not in an overbought condition? Great question. As we're up there touching all-time highs, literally within this trading session, I think it's natural for some traders to say, boy, it seems kind of lofty up here. Look, it's a long way down from here, isn't it? So maybe if they're looking for a bullish pattern, maybe they don't want to fight what has been such a strong bullish market, but there may be some that might hesitate to trade stocks that are like the S&P 500 all the way up there. So for our first example, let's pop over here, and I'm going to be using Advanced Micro Devices. This is not trading at all-time highs. However, some technicians may recognize that it has a similar expression in its price behavior recently. Looks like a potential bull flag here. Now, before I go into explaining what a bull flag is and how it might be traded, of course, some people are going to say, it's again another natural question, Cameron, how did you find this thing? Well, sometimes we can get pretty sophisticated with our scanning, but when we're looking for behaviors on a chart, if the trader has trained their eye and they know what they're looking for, they may want to trust their eye the most rather than trying to describe to a system what they're looking for and then hope that it goes and finds the right thing. Here's the highly sophisticated thing that I do I'd say that with a wink and a nod because it wasn't terribly highly sophisticated. I literally just started going through component companies of the S&P 500 because if the S&P is marching in a certain direction, lots of other stocks that are components of that index are likely to be marching just the same way. So Thinkorswim actually creates, manages, and publishes a list of the companies that make up the S&P 500. So we can find it over here in the gadgets in the left column under our watch lists. So if you don't have watch lists here, you can add it. Just click on the plus sign and then choose watch list right there. But then once we have a watch list, we can go to the menu just to the right, go to the public watch list in alphabetical order and choose S&P 500. So that's going to bring up the 500 companies that make up the S&P 500. And then I've just organized them according to their market capitalization, the size of the company. So I have a column here. The default will always include the symbols, but these other columns are customizable. So I've just added two. What's the current market price, known as the mark on Thinkorswim, and what's the market capitalization, the size of the company. So to add those, we can click on this little gear and just look for them under Customize. So if we don't have them already, let's say we didn't have market cap. I'm going to remove that. Click OK. So you'll notice, I don't have it. If I click on the little gear, Customize, let's type in market cap. There it is. Let's add that, and then I can just choose whether to display it to the right of mark or to the right of symbol. Let's move it up to the right of symbol and click OK. And there we go. Now, once we've added that as a column, we can click on that column heading. And of course, we'd use the same process to choose mark or market value, the current market price of these stocks. But each of these column headings, we can click on, telling the system that that's our priority. And we can either go from smallest company in the S&P 500 to the largest, or largest company to the smallest. Now, this is not the only way to organize the companies in the S&P 500. It's not the only way to look for bull flags, but I wanted to show a way that might be a relatively quick way to do it. Now, one other thing to sort of speed up the navigation here is to make sure, let me expand my column here. You can just click and drag that column a little bit. But what I want to be able to see is this right next to the headings. So if I click on that number 4, what you'll see by default is this little chain link. And there's going to be one over here as well. And what you'll notice is that I have changed both of those to be the same color. Doesn't matter which color, just as long as they're the same. What that is telling Thinkorswim is to link those two functions together. The watch list of S&P companies over here, along with the chart. As soon as I made that link, I was highlighting Apple at the time. So look what populated on my chart. I can go to the top of my watch list now, click, look how quickly I can move through these stocks. So if a trader is looking for a specific behavior on a chart, they can just quickly navigate through this. And as a matter of fact, I don't even have to use my mouse. I can just use the up and down arrows on my keyboard. So watch this. I'm going to go down to the down arrow on my keyboard and just click, and it just starts moving me down through the stocks. And it only took me a few symbols, just looking at the chart, understanding as I do what a typical bull flag looks like. Didn't take me very long to find companies like AMD. Now, AMD is a little bit further down the list, but I actually found a good handful with about a minute or two of looking. Right? That's it. So that's how we found AMD, for those that were asking. There we go. So I'm going to close that up. Don't really need that left column. I want to focus our attention on the chart now. So let's talk about just exactly what a bull flag is and how a trader might use it to plan and place trades. First element of a bull flag, this really leans into why traders commonly assign value to it, is that it is an explosive acceleration of a previously established upward trend. So if you'll notice with advanced micro devices, it had been stair-stepping its way down, 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 down. As the stock is going downward, some traders may be looking for that to reverse course and start stair-stepping higher, running through a series of higher highs and higher lows. And advanced micro devices has started to do that. So for some traders to identify whether a stock is, in their view, truly downtrending or uptrending, they may just look at these little cyclical patterns that a stock will typically go through. So a stock on its way down or on its way up will very commonly go through sort of a stair-stepping short-term cycle pattern. So let me just draw in some of those. And somebody just chatted in a script. Thank you for doing that. I don't know who made that script. I can't endorse that script. But yeah, and it might be outside the scope of today's discussion anyway, but I definitely appreciate it. Any scripts that are shared by us, and really just by anybody, this should be a general rule of thumb, not guaranteed as to a timing accuracy. If you don't know what a script is, there's a programming language that can be used within Thinkorswim to create custom tools within Thinkorswim. It's getting kind of fancy. I don't want to get that fancy today, but thanks for the chat. Anyway, but in defining a downward trend, some traders will look at the short-term highs and the short-term lows and see if they're just working their way lower. And then as a potential sign that things are reversing, they'll look to see if those cycles are starting to move in a new direction. Here we can see higher lows and higher cyclical highs. That is actually, for some, an absolutely required precursor to even looking for a bullish flag pattern. Because a bull flag pattern traditionally is seen as being a continuation pattern. Continuing what? Well, continuing a previously established trend. So here we have a trend that started going higher. Now that we see that, I'm going to clean up my chart, right-click on my drawing, and just clear that drawing set. And that might get some would-be bullish traders excited, but here's what might get them even more excited: when there is an acceleration, explosive acceleration of that trend. Something just got investors in advanced micro devices disproportionately excited. So when a stock that was already going up starts to go up even faster, the trader might watch that. And it'd be great if we could grab onto that before it started, but commonly we're just looking with the benefit of hindsight. That excitement might be described as a flag pull. Oh, LZ says, what's the average number of days for these cycles? So I can only speak very generically. They're not all going to be the same way, but typically from peak to peak or from trough to trough, usually a couple of weeks to maybe 4 or 5 weeks, something like that. But it can certainly vary from one stock to another. And sometimes stocks just decide to run up and not stop. Other times they run down and not stop. But yeah. But here we have an apparent flag pull, an upward trend. That's a check in the requirement for an established trend. And then explosive acceleration of that trend. Now, put yourself in the shoes of a trader who's been monitoring this stock, and you see it just about here. This is June 27th, June 30th. You stumble on AMD, you see it's been going up. You see that more recently, traders have been even more excited, driving it up even further. Well, that trader might say, ooh, something exciting is going on with AMD. But as someone else pointed out, is it possibly getting a little bit heady up there, a little bit high? A typical assumption with a bull flag, and this relates specifically to the timing of when the trader takes the trade, is that we wait for that stock to take a breather, start to come down. There should be some profit taking at some point, is the assumption of our bull flag trader. Traders got excited. A lot of people made a lot of money in a very short period of time. And as a matter of fact, what do we do? From about 114 up to about high of about a 147. That's like a $34, $33 move on $114 stock. That was about a 30% move. That's that's pretty close. 25% move on a stock in like 2 weeks, a week and a half. That's a big move. A lot of people may decide, wow, that was fun. I'm going to take some profits. With a bull flag trader, that's an assumption. It's not discouraging. They actually are watching for that profit taking, as long as there's not too much profit taking, because it can be relatively easy for some profit taking to tilt into panic selling. That's not what the flag trader likes to see. All right. So to go to the LZ, you asked a great question. The average number of days, actually the proportions of these price patterns can be vital for some traders in identifying whether what they see is what they consider to be a valid flag pattern or not. So let's say our trader is all excited because the stock has run up. They see the profit taking, that's the label they're applying to it. There's some selling, taking prices back down. Some traders taking profits off the table. All's fine so far. If that extends too far, though, and for some, the definition of too far is if we go back more than half the distance that was gained, we might be tilting into that sort of panic selling territory. So let me zoom in on this so that we can see this a little bit more closely. So if our stock just ran up from let's call it 115, up to a high up here of 148, that's about, what is that, about a $23 move? Well, half of 23 would be if we sell off more than about $11 or $12 on the way down, that might be a little bit too much for a bull flag trader to still be comfortable. So where would that be? Up here at 148, let's call it $12 below that would be about 135. Interesting. Where did we settle in as we sold off? Right about that 135 level, and then we started going again. That's not uncommon at all. If we zoom back out, let's scroll on over, see our last big explosive move to the upside. And this one depends on where we draw our flag. Even if we draw from these lows, $97 up to a high here of about 122, that's about a $25 move. About half that distance would be maybe $12 or $13, taking us maybe back down to about 110-ish. Interesting. Look where we came back and then started to run again. So we're starting to learn the logic of a trade, the setup for the trade. This is a bullish trend, behaving more bullishly, a little bit of profit taking. Ultimately, what the trader is hoping for is the stock will just do again what it's done before. I might need to recruit that last move here again. That looks like more, maybe our trader might have drawn from this low up to that high. This looks like a pretty good flagpole right there. The stock really got a mind to move, and it's running up, and then it started pulling back, and then it started moving again. And what the trader will commonly do is they'll use this length of the flagpole as a guide. They're using recent history to determine how far can this stock typically, or how far has this stock moved recently once it's gotten up a mind to move. And if it starts to go again, maybe it'll do that again. So on this move, here's one technique that we can use on Thinkorswim. When we've drawn a line, we can right click on that line and duplicate it. And so we might just take that, let me click and drag that over here, and that might provide for the trader a target for where they think stocks might run up to next. In this case, it exceeded that projected target by a little bit. But that's a common application of a flag trade. So just revisiting the elements of the trade. Bullish trend already established. That's qualifier number one. Number two is an explosive continuation of that trend. Number three is a retracement against that explosive move. Now, if it's helpful for you here, there is a proportionality that some traders will apply here. Typically, there are not more days of selling than days of buying in the flag pattern. So in other words, let's say we ran up for 5 days and then pulled back for 7 or 8 or 9. That's starting to get a little bit long in the tooth, and a flag trader might consider that to be the momentum is kind of stalled out in this move. Maybe even if it hasn't pulled back 50%. But in any case, explosive continuation of an established trend, a pullback against that trend, and then the entry signal. So let's get into when to take a trade. The entry signal comes as price starts to move outside of this flag pattern. what you might think of as the cloth portion. Now, for some, what they'll do is they'll draw in a line across these candle highs to help them spot this. So I think an argument might have been made. It'll be kind of a soft argument, but maybe a couple of days ago, price was starting to move. Really, that's going to be a matter of, well, did we draw our flag here, or did we? Let me activate this drawing. Do you think somebody might have drawn it right there and said that's still inside? Possibly. Starting to get a little bit more decisive just yesterday, but as of today, I think that lots of flag traders might, if they were looking at this in the first place, they might say, there it is. I have my entry. What does that mean? Well, we have our upward trend. We've had our acceleration of the trend and a little bit of profit taking. And now it seems that enthusiasm is gearing up again. And where the enthusiasm for this stock has been so pronounced very recently, maybe it might not take much to get it going and have it run up again. So there's a potential entry on AMD. Let's zoom out and start to plan a trade for where this might go. Where might a trader take profits if they decide to take this entry? And where might they just admit that they were wrong and take some losses? Well, the assumption here is that we think maybe history will repeat itself. It's never guaranteed to do that, but the assumption is maybe it might. Let's right click here, and I'm going to duplicate this drawing. And as I do, for those of you who identified yourselves as pretty comfortable with bull flags, I want your opinion on this, because there are differences of opinion on where to position our target. There are some that subscribe to a school of thought as they move their flagpole to establish where they think the stock is going to go. They start that down at the bottom of this flag. So project from these lows and maybe hope that we go up an equivalent distance to the distance that was previously traveled. That's one school of thought. The second school of thought, some traders argue, it's actually at the breakout point. They might go up here where they've drawn their downward sloping price ceiling, their resistance line, and assume the move starts from there. And that's going to give a little bit more aggressive, a little bit more distant price target. So what do you think? Would you draw it from the lows or from the breakout point? I'll say there's not really a right or wrong answer there. I've seen arguments on both sides. Wiley says he uses another tool. I was tempted to use that tool. Wiley says Fibonacci. Let me make a suggestion here. For those of you who Wiley kind of threw in this phrase that he and I are both familiar with, but it's called a Fibonacci. It's a drawing tool that establishes price targets and price floors just automatically. Well, it depends on how the trader draws them. But if you're not familiar with that, do yourselves a favor. And first of all, make sure that you have subscribed to our Trader Talks channel on YouTube. You can subscribe just by going down the lower right-hand corner, clicking on subscribe button right now. It doesn't cost anything to do that. It only takes a second to do it. But our YouTube channel is where we house all of our previous webcasts. There are a handful of our webcasts that aren't posted to YouTube after the fact, but the vast majority are. So subscribe to our Trader Talks Schwab Coaching webcast channel, and then you can find our playlists right here. You can join the live streams, of course, but like, for example, you can find the playlist for this webcast series. You just scroll down and look for After the Close, but you see, like right there is the After the Close playlist. Another thing that you can do to go to Wiley's suggestion is do a search. Let's say you have an interest in Fibonacci's and your coach, Cameron, didn't explain it well enough to you for the day. Just type in Fibonacci's, Fibonaccis, hit enter on your keyboard. Hey, what do you know? There's a beginner's guide to using Fibonacci's to trade stocks by me. I'm just not talking about that today. Anyway, back to our bull flag. What do you think? Jurate says low. David, Andrew, Life in the Fast Lane say they use the breakout level. How about for this one? Let's just leave it there at that breakout level. So the value here is, I'm going to do a little bit of rounding. It looks like it goes a little bit beyond 170 bucks. If we get a move that's proportionate to this one from this breakout point, so that's going from what, about 137 up, an equivalent distance would take us, about $24, $25 upward, would get us up around that 170 level. And interestingly, if I zoom out just a little bit more, what does that coincide with back here? Maybe some important previous levels of resistance or price ceiling. So let's call that our price target. So if we get that swing upward, we're going to take our profits up there. That'd be a pretty nice profit. Definitely not guaranteed that that's going to happen, though. So where might a flag trader just admit, well, this one isn't working as I thought? Because price patterns can fail. No technical approach is perfect. No technical approach can deliver a guarantee of performance on a given trade. So where might a flag trader admit that they're wrong? Well, if we re-enter that flag and start to make lower lows on a daily basis, and this is a daily chart, this could conceivably be applied to hourly trades or to weekly trades, but we're just using a daily chart to plan these trades. Yeah, so our would-be flag trader may note that if the price comes down even below the lowest point in this flag, boy, this is going the wrong direction. Maybe it's time to pull the plug on this. So what was the lowest point on this candle? The low that day looks like it was about 133.5. As I point at that, I can look up here to see the low. You can see open, high, low, close. Our low on that day, 133.5. Maybe the trader gives it a buck or two, maybe a percentage point or two, but eventually just draws a line in the sand. Let's say if we were to get back down here to, shall I just call it 131? That's below that low. So if we're getting in at 144-ish, and the stock reverses course and goes down to 131, that would be theoretically about a $13 risk. On the other hand, if we get in at 144 and we're able to ultimately get up to 170, that gives us about a $23 reward, a $26 reward. That's interesting. That's just right at 2 for 1. Some traders have that preference. I didn't build it that way intentionally. But that is pretty much how a trader might plan and place a bull flag trade. Couple other things I want to note here as we go place this trade. Number one is there is an earnings announcement out here on the horizon. So our trader, if they don't want to hold through that earnings announcement, might want to make a note of that, and they may want to ask themselves, does this thing even stand a chance to get to where I hope it goes within that time frame if I'm trying to avoid that earnings announcement? Well, this thing, when it's gotten ahead of steam in the past, has taken a couple of weeks to make these big moves. So if it can do that again, this still has almost a month as of the recording of this webcast. So that might be adequate. The other thing is, our trader, since they know they're trading after hours, they know overnight things can change. And as we place our trade and we go prepare for dinner, maybe the trader just wants to make sure that this thing isn't already starting to falter in the overnight hours. So let me do this. I'm going to zoom back in here one more time. Oops. Nope. Let me just reset things here just quickly. If you ever goof things up and your chart looks all screwy like this, you see these double-headed arrows pointing at a wavy line. Just click on that and change that to auto. And that'll it just gets your chart proportions corrected. And then you can just zoom out using a little zoom in, zoom out functions down in the lower right. In any case, let me just clean this up. Let's make a mental note, $170 as a target, $131 as a stop. And as a matter of fact, we can just write that over here in our scratch pad. We have a target, 170, stop, 131. But what I wanted to note, now that we have those noted, I won't forget them. Let me just clear up my drawing set and look at today's candle. Let's say the trader was excited that we're starting to move higher and they plan and place their trade, but while they're eating dinner, while they're sleeping, some bad news comes out and we open trading tomorrow down below today's candle, and we're already threatening to get back down into our flag. Well, what they might want to do is just make their entry contingent upon the stock remaining above, let's say, today's candle low. Today's candle low is 141.85. Look at the low up there in the upper left. L low 141.85. So I'm going to make a note here. I'm going to start this whole thing off with what's called a buy stop order at 141.80. That just means if the stock is above 141.85, that's when I want to buy it. Not below 141.85, above that. All right. Let me see if anybody's okay. People are chatting in, making other observations about other potential technical variables on a chart. I'm not going to go deeply into that, but there could be other ways to analyze this chart. And if it is the trader's habit of using other technical approaches, what I would suggest is be consistent with those habits. If they're working, then apply them to this one as well. But we're just using bull flags in this case. Let's go to our trade tab. I'm going to go to the ask price and right click on that. And I'm going to put in a custom buy order with what's known as an OCO bracket. Sounds fancy. Here's what that does. When we choose that, it gives us three orders, one buy order and two sell orders. Our buy order is to buy some shares of AMD. Sell orders is to take profits or to try to cut losses. So here what the trader might want to calculate how many shares they want to buy. Let's just stick with, you'll see here that we have 100. That would be a $14,000 trade. How about we just back this off? Let's link them all together and just back this down to just 10 shares for our example trade today. Now, another thing the trader might do as they're placing this buy order, change this to a stop. A lot of people associate a stop order with a sell order. Well, traders actually use stop orders for buying as well. A stop sell order is typically, hey, sell if the stock is falling to a certain level. A stop buy order is to buy if the stock is rising to a certain level. In other words, hey, stop, it's going in the right direction. Stop the bus, I want to get on. So I'm going to put in a buy stop order. And that is if the stock is above 141.85. And you might say, well, the stock is already above 141.85. Right. I just want to buy this if it's still above 141.85 tomorrow. I'm going to make sure that's a good till cancel, pardon me, just a day order. So either fill this order at or above 141.85 tomorrow, or just forget it. Looks like the bull flag is starting to falter. Now, if that fills, that will trigger two sell orders to go into place. This first one is our limit order, and that's the one that we're going to use to potentially take profits. 170 is the profit level. Let's make that a good till cancel order. The other one is to manage losses. We're going to put that down at 131. Make that a good till cancel order. That stop order is not a guarantee that we will sell at exactly 141. If the stock is falling hard, it's quite possible it might gap beyond our stop order, trigger that to sell, and we sell at a lower price than 131. That's it. Let's click confirm and send. And here we have planned, we've used, now don't leave yet because I have some other points I want to make, but this is for our trade that we're placing after the close. Buying if we're above 141.85 at a stop. And by the way, this stop with the buy order, it's not a guarantee that 141.85 is the price that we're going to pay. Could certainly be above that. It is already above that. If we fill, then we'll sell at 170 or sell at 131. And if either one of those is filled, the other one will be automatically canceled. There's not a commission on this trade, but there can be on some type of trades. With stop orders, there's no guarantee that the execution price will be equal to or near the activation price. Accurate for buy orders and for sell orders. John says, why not a stop limit? John, we could do that. Stop limit just means we're putting in a stop. And I don't know whether you're telling the asking about the buy order or the sell order, but it's a stop with a limit price attached. In the case of a sell stop order, we're telling the system, hey, sell at this price, but not below this price. I want to get at least this much. There can be advantages to that, but there can also be risks. It can limit the amount, for example, that one sells for, but that limit may not be achievable and a stock could gap beyond it, and we just wind up owning shares that are just collapsing in value. So there are pros and cons. But I'm going to send this order off, and we'll let that work. But I did want to point out a couple of other things. There can sometimes be, when people learn about flags, it can be fun to learn, exciting to learn. I have new traders who say, hey, Cameron, I found this nifty stock that seems to be a bull flag. And I look at it and say, I don't think it is a bull flag. Let's talk about some fake bull flags or trades that might be masquerading as bull flags. Couple of examples here, or at least one. Let's look at something like Home Depot. Hey, look at this. You veterans, tell me what's potentially wrong with Home Depot. Wasn't this a great run up? That's pretty good flag pull. And then we pulled back. It didn't go beyond 50%. It didn't go a greater number of days down than it went up. And it looks like we're pushing up out of there. That almost looks like a better textbook bull flag than the one that I just demonstrated. What's the problem with that one? Here's the problem. What was the trend leading up to it? That's a downtrend, right? So yeah, that's I would not classify that as a bull flag. Now, some eagle-eyed trader out there who trades price patterns regularly might say, yeah, Cameron, it's not a bull flag, but isn't that a potential inverted head and shoulders? Wouldn't call it that either. Just a little bonus here, because that is actually a bearish reversal pattern, and there was hardly even one day before that one started where it had been going down already. Anyway, yeah, keep an eye out for those because they can pop up. Pepsi, very similar. This looks like a bull flag. Running up, pulling back. The proportions are correct. The number of days are correct. The move today appears to be correct, but the trend is wrong. If a trader subscribes to this being a continuation pattern, that's not a continuation of an established bullish trend. And there's one other thing here to watch out for: earnings announcement, if that's something the trader likes to sidestep. But guys, we've accomplished what I set out to do today. This was fun. We've had our after the close webcast. I'm going to step aside and let the regular presenter come back again last week, but I wanted to take a look at the markets and use that as a backdrop for talking about bull flags. The S&P 500 looks like it has a bull flag, and so a trader might use that to go look for, plan, and place bull flags after the market is closed. So, guys, go have a great day. As you go, of course, remember 2 additional things that I would suggest everyone do. Number 1, make sure that you're subscribed to our Trader Talks channel if you haven't done that already. It only takes a moment. Go down in that lower right-hand corner, click on that subscribe button. Trader Talks Schwab Coaching Webcast channel is where we house our playlists. It's where we can join our live streams, and you can do searches even for keywords for topics of particular interest. The other thing that I would suggest is that you track me down on X and give me a follow. Make sure you do the same thing with James as well. You can find James on X at James Boyd CS. You can find me on X at Cameron May CS. And just as an example, I asked about this apparent bull flag on the S&P 500. Also, just this morning, I published a little 2-minute video on that linking functionality that I displayed today, where we can link different tools on Thinkorswim so that our symbol follows us around the platform without us having to continually type it in. All right. So there we go. Everybody, Go have a great day. I'll look for you in a future webcast. James, thanks for helping out in the chats. Everyone, if I don't see you in a webcast soon, I'll also look for an X. But whenever I see you again, until that moment arrives, I want to wish you the very best of luck. Happy trading. Bye-bye.